Okay. Good morning, everyone. Nico, what's going on? Good to see you here. Ernie, what's up? Wow, what a start to the day, guys. This is a lot of fun. We're seeing these meme stocks ripping to the moon. So we're going to really be spending some time focusing on those today. Last night on the PA workshop, we spent a lot of time talking about what to do in this, FOMO sort of environment that we're in. This issue, these things going on with GME, Blackberry, AMC. Honestly, guys, I personally don't have a position in any of those, and I'll explain a little bit about why I don't have a position in those. But I know a couple people who were long some GME calls and had a nice little payday, had some fun with it. And that's super cool. So congrats to any of you that did have that. But what we're always focusing on this stream is what do the numbers have to say and what the hell can we do now, right? I'm not too concerned about just what happened in the past. Jekka, what's going on, man? I'm more concerned about what is the next move, right? If we were to take a trade today, right now, what would we actually be doing? Yeah, Mohammed, no problem. We can look into Alibaba. It might be a little bit further into the stream, though. First, we're looking at GME, Blackberry, AMC. So one issue we're going to have today, right? So when I'm doing this, I usually show you guys how to structure out the trade. We're going to give it a shot this morning. The thing is when I do it in my little Thinkorswim paper trading account. I like the way they visualize it. I live in Canada, so my actual trading takes place in Interactive Brokers, and I'm getting marked all over the place here. So, like for example, watch this. If I come down here and I try to put on if I try to put on a vertical here. Okay, now it's marking me okay. Maybe we'll be all right. But, 5 minutes ago, or okay, look at this, right? The 285, 290 vertical, I'm getting marked at $1.55 credit, right? So we'll see what we can do if we can structure stuff out. Just know, guys, we might run into a bit of trouble there. But what we are going to take a look at is the numbers here, right? Main things we're going to focus on is this implied volatility data, all right? So the market is implying huge volatility for GME, all right? Like absolutely massive volatility. What we're looking at here is the 30-day implied vol. And remember, when we're trading options, we are trading volatility products. Sure, it's nice to think the stock is going to go up, so I'm going to buy the call. But what you really are saying when you buy that call is, I think the stock is going to go up with a certain degree of magnitude within a certain time. So we need to keep that in mind, right? We have this volatility component. And what we're seeing for GME is it's implying a 400% implied volatility for the 30-day, meaning, day-to-day moves of about 20%. A lot of people would look at that, the average tasty trader would look at that and say, wow, implied vol's crazy high. We should be selling vol here. But this is the thing about trading, right? It's not just about what the market shows you. You actually cannot be a good trader just looking at what the market shows you. That's like saying I'm playing poker and I'm only thinking about, what's going on right now, like in my hand, right? Okay, I see a king and a jack and a 10 came up on the board, and I'm holding an ace and a 2, and what should I be doing here, without ever thinking about what could my opponent have? You're not thinking that level deeper when you're just looking at what's on the table, right? What we also need to do is bring it back to trading, is we need to think about, what could happen in the future? Right? The market's pricing it at 400 vol. What do I actually think this thing is worth? Right? So one of the things you get in the PA terminal, right? What I actually use as one of the fundamental building blocks of my trade decision making is this volatility forecast. All right? So that's this number here. And what this does is it allows me to, at a quick glance, using some statistical modeling, say, here's the market implied vol. Here's what I think is going to happen, right? Here's a basis for what I think is going to happen. Do I think it's cheap or expensive? And guess what? Given what the market's implying versus what I think, GameStop volatility is actually slightly cheap. It's pretty fair value. And it's easy to see why. Sure, implied vol's high, but the stock is moving like crazy. The stock is moving more than 400 implied vol. So it makes sense why we see that, right? We see it pushing all-time highs in terms of volatility. Okay? So what can we do here, right? What can we do? Well, if we look further out, there's some things. Here's the thing though, right? If something's fair value, there's not really a trade, right? Because you kind of agree with the market. But, some people here, we're going to really try to address is this whole, FOMO situation and, help people maybe structure out something that can give them a bit of a bet. I don't know if I would be buying an outright call or put here because it's just so expensive, right? Like, I've seen some people talking about how this thing could keep ripping. Some people talking about nobody knows what's going on here. Uncertainties at all-time highs. So what I would probably look to do, let's see if the weeklies have any, if the marks are okay here. All right, if you think this thing's gonna rip, right? What could we do here? I see, I'm getting marked so badly here, right? Imagine you can put on a vertical spread and collect money for it too. Wouldn't that be something special? Just quickly to answer, Keen and Mohammed, yes, the terminal is paid. You get access to the terminal, access to our community, and over 200 hours of education in quantitative trading and options for $80 a month. But in early February, and it's really actually just for the people on this stream, I'm going to be giving away 50 free trials. So if you want, I'm going to type my email in the chat here. You can send me an email and I will add you to the list for it. It's basically going to be a week free. You cancel within the week, you won't get charged. You get full access to everything. So you can do that if it's something that you're interested in exploring a bit further. You'll also get a strategy session with me as a part of it. So yeah, we're going to have a little trouble structuring out the trades here, guys. But what I would be looking to do is maybe take advantage of, I'd be trading something near dated, right? You want that, if you're looking at GME right now, you want exposure to a big move now, right? So what I would do is I would maybe structure out a vertical or a 132 fly into the direction that you think it's going to go. Vols bid across the board. And, that's what I would do. I don't know if I would be buying the outright call here. This is it's just too expensive, right? The actual amount you're paying and what this thing, it basically, if vol drops off, you are going to lose everything if you are buying the call or the put here, right? So that's my view on GME. And quickly, I'll touch on why I'm not in GME and why, even though I'm breaking down this trade for you, this live is for you, right? It's for me to give you my ideas and insight on trades that you might be considering or thinking about, right? So as we go forward here, make sure to ask questions. That's why we are going to take a look at, Baba for you, Mohammed, no problem. I'm not in GME because I have my own things that I do. Right? I know how I make money in the market. And GME, it actually came on my radar last week. So on Thursday of last week, I actually sold a straddle on GME. Right? I know, right? I was on the wrong side of that one. But here's the thing. I have a way that I trade. I have a pretty strict, or not that strict, but I know what I'm doing. And I was actually out. I sold it at 45. I was out at 55. I realized I was wrong. I cut it. I didn't do any of that Band-Aid, I'll sell this to hedge this, blah, blah, blah. I put on a view. I was wrong. I got out. And it was probably my best trade of the year because a lot of other people would have bag held that. Right? And now, ever since then, I've been just onto other stocks, right? Me and my business partner, Jordan, are looking at completely different things. We're not looking at AMC. We're not looking at GME. We're not looking at Blackberry. It's because we know how we make money. If it wasn't for, every single person in the world talking about GME, I probably wouldn't be doing a stream on it. So let's move on though. Let's talk about AMC. AMC is another one that has been going up like crazy. look, 188% vol or move is fucking crazy, right? Implied vol super bid. This time I'm actually forecasting it to be a lot lower. And that's because we've only had, 1 or 2 days of like serious volatility here, right? So if you think that we're going to continue to see that, right? And volatility does cluster. So I'm sure we will see a big move again tomorrow, or confident that we will at least. Then maybe you want to be buying it. I would personally be staying away from it, but what we could do is, these out of the monies here are actually looking not too bad right now. So if you wanted to get exposure to a super big move, what I would be doing on AMC, if you think it's going to keep rallying, is I would just buy some deep out of the money call, right? Buy something really deep out of the money. If you think the move is going to happen now, I would trade it short dated, maximize that gamma exposure, right? Think about what exposures you want. All right, let's come over here to AMC. We'll go to the Jan 29s. What can we get? Oh, there's no strikes. Ha! Crazy. Well, there's no strikes, boys. I don't know what you want. There's no trade there right now. Now, when it does, get the strikes, given the skew here, right? So everything that I'm giving you, you see me come here and just say something really quick. I'm just giving you an overview of some of the data points here, right? We start with, is it cheap or expensive? And then I come down here and I'm looking really at the volatility surface to see, well, okay, given that I think this is cheap or expensive, and given that I want exposure to the stock going up maybe, well, quickly, what's the best way to structure it out, right? What would I do if I wanted to do that? And what I would be doing here, given this, is I'd be buying something over here, right? The way that you can think about this is over here we have the out of the money calls. These are the at the money calls and puts. These are the out of the money puts, right? So depending on if you think it's going to go up or down, trading out of the money here wouldn't be a bad idea. Let me see here. What's this going for? Wow. Okay. Like, so these can't be correct, right? These just, these are crazy here. This is going for, oh, that was the call. My bad. Let's see. All right. If we bought this, what would this look like? Let's drop the date back down. I was looking at something pretty far out here. And so this is really what the trade is going to look like. Let's drop this down to one lot here. Oh, wait. This is one lot here. Got too many things populated. Right? So, you're going to risk about, it's not amazing, right? This is maybe too far. We need better strikes here. It's really that simple. But, you can see here, you're risking about $100. And if the thing goes back down to where it was, you're going to make about 400%. Right? If we see a complete reversion in the price, you'd make about 400% buying this call. The thing I like about it is it's far enough out that your risk is pretty low. So if you are bearish on AMC, this would probably be what I would do. Let's see if we got, I just don't think there's much going on here. Like, maybe this vertical, nah, it's not enough. Not enough juice here for me. You're basically just betting on it going back below $8.60 here with 100% return. It's not really something that I'd be interested in. We could do like some way out, if you had a super specific view, we could maybe do something funny like, let's see. I don't know what the straddle's going for though, but let's see. We've got 9. Maybe something like this could be fun. Oh, they won't let us do it. Yeah, see, this is the one challenge that I was saying we might have here. The strikes are just so messy, man. They're just so messy. So we're probably going to stay away from the actual structures of the trade right now. Spend some time focusing on more so just the data points behind it, right? So right here, vol's looking a little cheap. I don't know if I'd be going out and just straight up selling vol right now. If I were to do that, I would want to be waiting for this thing to slow down, right? One of the concepts we can talk about really quickly here, right? For those of you that have been tuning into the stream for a while, you'll be very familiar with this. If you're new to it though, we need to talk about two of the characteristics of volatility. Remember, we're trading a volatility product here, right? So number one, volatility, clusters. And number two, it mean reverts, okay? So what does this mean? What it means is volatility, this one looks like this. It means if today we see a 5% move, the most likely move tomorrow is 5%. Okay? And then let's say we see 5 into the future, and then we see a 1% day. Well, the next most likely move after that 1% day is another 1% day. So we combine that with this one, which means that over the long run, volatility looks like this. Okay? When volatility goes high, it tends to come down. When volatility is down, it tends to come back up. And over the long run, we see it at this mean here, right? So for example, when VIX is up at 80, it'll probably come back down. When VIX is down at 9, it's probably going to come back up. So when we combine the two, it looks like this. Right? And if you were to plot implied vol, let's say red was realized volatility, which is how much the stock is moving. Implied volatility looks something like this as well. So what I would be looking for, right? Let's say, let's say that we plot those two lines again, and we see this, right? Right now AMC looks like this. Okay, and the implied vols were something like this. Okay? Well, what I want to see is this come down. And hopefully this stays up because of all the hype. Now, when that happens, I would be looking to sell. But as it currently stands, it's like this, which means we may not be at the top yet, first of all. Or if this comes down to these tend to try to go together, well, you're not going to make any money there. So that's why I wouldn't be, shorting vol on AMC right now. I think being short vol on AMC would be absolute lunacy. I wouldn't be doing it. I would be buying something deep out of the money, get that exposure, short, these are the FOMO trades, right? It's like, fuck, I don't want to miss it. I don't want to miss it if it happens. So this would be the trades that I'd put on. Similar thing for Blackberry. Oh, that's ABB. Oops. All right, Blackberry, it's not as crazy right now. Maybe we can actually take a look at the chain here. Trading at $21 right now. I'm on a bit of delayed data on this. I don't have paid data for my paper account. I just use it to structure out things. Okay, we have some strikes here, so we can actually have some fun with Blackberry. Take a look at the chain properly, see what's going on. Okay. So buying something out of the money here, maybe not a terrible idea. Let's see what's going on. 79. Here, let's try a couple of different things here. So the first thing I want to do, let's see what the straddle's going for. Straddle's going for $15. That can't be right. There's no way. There's no way it's this expensive. That's so crazy, man. Yeah, okay. Blackberry vol is so expensive. I don't know what to say here, guys. That's crazy. That's just crazy pricey. Any of you guys have a view on that? Let's see here. You selling this? Oh, $6, $4, 26. Okay, so let's do this. 22, 26, and then 28. Let's see what that looks like. We're getting a credit for that. It's such bullshit, man. These strikes are so messy. 22. Let's go up 6. 28. 31. Let's see this. What do you guys think of this? This might be slightly off, but this would be the kind of thing that I would look to put on maybe. Eric, do you mind structuring this out in your cash account there? Let me know what you see. The 132 fly, 22, 28, 31. Because this might be the craziest risk reward trade like of all time. Nyax. So the biggest thing that I was saying here is, I have no idea what price it's going to go to, right? And I think anyone telling you that they know what price this thing will go to is, is really speculating is a nice word. What I am saying though is if you have a view, right? What's the best way to structure it? For AMC, I was thinking, so first of all, you don't have the strikes to bet on it going up really. So if you wanted to bet on it going down, I was thinking a deep out of the money put is actually not looking too bad. It's not as expensive as it could be. But what we're looking at right now is Blackberry. And this trade right here, our buddy Eric is going to quickly pull it up. And he's going to let me know what he sees. But what I'm seeing right now is a pretty damn crazy trade here, where you can make probably the most insane risk to reward that I've ever seen. It's just, I need to make sure that it's getting marked correctly because these stocks are so crazy this morning that the marks are just all over the place. But yeah, check this out. If this is correct, you're able to put on a trade for $180. That pays out almost $6,000 if you're correct. So, and what needs to happen is Blackberry needs to rally. Right? Eric, isn't that insane? So it is correct. Guys, you can put this trade on. Eric, are you throwing this on, man? You want to throw it on with me for a laugh? This is absolutely... Okay, guys, this is like... If you want to make a YOLO bet, this is the YOLO bet to put on. I've never, ever seen this before. I've never seen this before. Like, in my life. I'm actually going to end this stream right now so I can go throw this on. You can bet. All right, look at this. Eric, I swear to God, if you jump in before me here, man, you definitely owe me beers this time if it hits, all right? Because you're going to push that price up. I know you're going to do it. Look at this, guys. Look at this. You can bet $18. All right? You can bet $18. And if Blackberry goes to $28, in the next month, you're going to get paid out almost $600. That's a 3,000% return. That's so funny. I wonder if we can do something different here, guys. Like, Eric, can you go structure out the same thing on the weekly? Right? Can you go to the Jan 29 and let me know what we're seeing there? Guys, this is so funny. Like, I've actually never seen one this crazy before. This is like the lottery ticket of all lottery tickets, but it might get better. Eric, I need you to check that out for me, man. I need to know what's going on there. Yeah, guys, just hold up for a second. I don't know if you're having as much fun as I am right now, but when I see things like this, it gets me going. This is a fun trade. Let's see, the 22, 28, 31 call fly. Let's see if we can not get some screwed up numbers here. 22, 28, 31. Okay, 37 cents. All right, this is pretty juicy as well. It's a little more expensive though. You're right, man. But you know, sure, it's a 2,000% payoff if Blackberry lands at $28 this week. Now, Mohammed saying it will easily hit $28. What the hell, man? So, Mohammed, this is the thing. Take a look at the payoff here, right? So this blue line is our payoff at expiration. The flat part here is our loss, and this triangle here is where we make money, all right? So what we could do is, yo, Eric, post the two in the group and tag Jordan and see what he thinks. Just by the way, I want his opinion on these. Show him the monthly 132 and the weekly and ask him what he thinks. Now, actually, I'll do it after this live. Don't worry about it, man. So check this out. If Blackberry goes above $30, we're actually losing. We're going to lose our money that we put in. Right? So we need to keep that in mind here. Sure, we get this really big payoff here, but we have a very, very specific view. Right? Our view is that Blackberry will land between $22 and $31 this week. If it doesn't, we lose. And it's for having that specific view, understanding volatility, being able to price the volatility, understand the structure of the option chain, that we can take advantage of it and put something like this on. Right? I'm really glad that even though AMC and GME, weren't the most delicious tendies that I've ever seen, we found these. We found this bad boy, right? So if you want to take a YOLO trade, this is like the fucking best YOLO trade I've ever seen. So, all right, guys, I think that's worth a like on the video. We got 20 people here. I'm only seeing 7 likes. You guys know that the YouTube algo gods hate me, right? It's, the YouTube algo gods, they only like to promote the Crayon Kings. They don't like to make room for numbers like this. So, drop a little like, help me out here, guys. It means a lot. Quickly, some stuff to keep your eye on tonight besides this, right? Throw this on for a laugh if you want. Exactly, Eric. And a sub. Drop a sub as well. And hit the notification bell. And leave a comment. And tag a friend. While we're at it, tag a friend as well. So, last thing I'll say here is there's more to keep your eye on, right? In the end of the day, I'm going to throw one of these on for a laugh. But things that I have my eye on tonight are some big earnings events, right? We'll pull up earnings. Let's do that real quick here. No, Keen, no. Don't buy a call, man. What you want to do is this. You want to go either Feb 19 or the weekly. You want to structure out an unbalanced fly. All right? So here's what you want to do. You want to buy, and you want to do it all as one trade. Don't be legging into this trade. That's just not going to fucking work. You want to buy 122 call, sell 3 28 calls, buy 2 31 calls. And if the stock lands at $28 this week, it is going to print. All right? So, guys, that's really it. I'm going to quickly pull up the terminal scanner, show you what I'm looking at for earnings today. Super, super quick here. And we're going to go from there. Okay. And we're going to look after close today. Guys, I'm pretty sure, how did that Microsoft trade go? I'm pretty sure the Microsoft trade was looking pretty good this morning. Saw a couple of the lads come out with a bit of a profit. We got Apple after hours today. Eric, are you in that 132 fly on Apple right now? It's looking pretty juicy as well. Right? So Apple, pretty pricey move going into earnings. We come here to the Vol Insights. And we still got that call skew. Check this out, guys. We got call skew here. We can do something pretty damn cool on Apple. Check this out. Ned, take a look at this, man. Yo, you got to throw this on your account, Ned. Whoa, what the hell? The butterflies are so pricey now, man. Did you guys screw up my trade? You guys got in before me. You front run me. I can't believe it. I can't believe you guys would do this to me. Oh wait, this is the Apple Fly. Oops. Yeah, check this out. This is the Apple Fly, right? So going into Apple earnings here, we can take a trade where, let's say we throw this one on, right? We can risk $150, make $800 if Apple rallies on earnings, right? If it goes up to about $150 here, we're gonna print some delicious tendies, guys. This would be a great way to do it. Simply applying the data we're seeing to structure out a pretty cool trade. Let's see the one that Eric has on. Eric's got the 143, 157, 157.5, I guess, and 165. Eric, the tendies aren't looking as good here, man. You didn't take the signal. Yo, Ned, you got to look at this, man. Blackberry. All right, check this out. Check this out, dude. Let's see this one. All right, you can trade the Feb 19 expiry. Let's do the weekly. The week, it's a little more pricey, but realistically, we don't know how long the vol is gonna stay. So check this out. $370. Put this on for 10 lots. If Blackberry goes to $28, we're gonna get paid out almost $6,000. 2,000%. Right, 20-to-1 leverage right here, boys. This is 20-to-1 leverage, and you just have to put on a tiny little bit of your account. I'm gonna throw one on for fun. I'm not gonna be putting my whole account on this or anything. Remember, guys, the number one rule is stay in the game. This is just for fun. Really, I'm going to be looking at earnings today. That's actually what I'm spending my time on. But I thought we'd have a laugh, talk about some meme stocks this morning. We got LVS. We got Levi, right? Lots of really good earnings opportunities, actually. Really expensive vol going into these earnings events here. I'd be looking at, off the bat quickly, Levi, LVS, SLM, Apple, 100%. Yeah, those would really... FB here. FB is looking pretty fair value, actually. Let's check the before open for tomorrow, see what we got there. (2021-01-28). Let's see if we got any juicy ones here. AAL looking pretty damn good. What happened with UAL? You guys remember? We could be pretty good here. Let me see. Flex is looking pretty pricey. McDonald's looking fair value. Nothing there, I don't think. MUR has no earnings move priced in. Is that because the thing's moving like crazy right now? Let's see. No, MUR is not even moving. What the hell's going on here? No earnings vol being priced in here. Let's take a look at this thing. Yeah, I'd maybe take a long vol position on MUR going into earnings. Looks pretty cheap. Hey, Keen, I use Interactive Brokers. You can see it down here. This is what I use for my actual trading. Reason I do that is because I'm in Canada. They give me the best commissions. And as if you're actually taking trading seriously, you got to watch your overhead, right? You're running a business. You got to watch your overhead. As for at what point do you close this? I tend to let them run to expiry because I'm never betting any money that I super care about, and I like to go for that pin. I know a lot of people close it out if enough time has passed and they're happy with the return, right? Because if we go back to it for a second, let's say, check this out, right? This is today right here. If today it rallied to $27, you'd make 300%, right? And if it stayed at $27 tomorrow, you'd make 600%. Maybe you take it. Maybe you fucking take your money and run, you know? Right? This is actually a really good trade because if you get that huge pop to the upside still, you get that huge return as well. It just goes down over time. So I would say this is the best bullish bet to put on for Blackberry. Guys, I'm going to get off the live in 1 second here and go throw on at least one lot of this just for a laugh. You know, it'll be a fun one to talk about if it rallies tomorrow. What's Blackberry even trading at right now, man? My data's all fucking delayed. $21. It could happen, guys. It could happen. Let's have a laugh. Let's you know, Eric, I know you and I are going to do it. I can't really advise anyone else. Remember, guys, this is not financial advice. So, you know, don't sue me. That's really all I got. Yeah, guys, group's popping off. Guys are having a good time here. I love it. All right, guys, am I going to come back on later today? Mohammed, I do this live stream at 10:30 a.m. Eastern Standard every day. I currently do not stream later in the day. We do a live at night in the predicting alpha guys. So, you know, I got to manage the book as well. Yeah, Discord. The Discord is just for PA subs, but there is actually another Discord that I do really like. It's run by one of our members. It's this one here, Option Trade Meetups. I lurk in it once in a while, but I would definitely check this out, guys. It's run by Steven and Eric. They are Eric's actually in this chat right now. Eric, if you want to drop a link to it, that would be really good. Yeah, that's really it, guys. So if you found this stream valuable, make sure to drop that like on the video and hit the subscribe button. It means a lot to me. And shout out Blackberry for giving us a cool trade. Hopefully we make a little bit of money. Take it easy, everyone. Have a great day.